Hello everyone, my name is Zach and welcome to On Cash Flow, where I help you become a master of your own cash flow. Now let's get started. The first and probably the biggest and most substantial thing that you can do in order to reduce your state taxes is to move. Because some states, they tax you a lot, some states, they tax you a little, and some states, they don't tax you at all when it comes to your state income taxes. Currently, as I make this video, there are 7 tax-free states: Alaska, Florida, Nevada, South Dakota, Tennessee, Texas, Washington, Wyoming, and then plus New Hampshire, if you count New Hampshire, because they only tax investment income. I moved to Tennessee, and this was one of many reasons why I chose to do so. And if you are serious about substantially reducing your state income taxes, then one of the best things that you could do, and one of the actually easiest things you can do, is to simply move into a lower tax jurisdiction. And similar to that, except for it's a little bit more of a niche thing, is if you are like a world traveler, or if you live in an RV and you travel all over the place, what you can do is almost like moving to that state, except you're actually just changing your domicile. Since you're a world traveler, or since you are constantly on the move, like if you're living in an RV, you can actually just change your domicile. You know, of course, there are going to be some things that you do need to follow. You actually do need to pretend like you are living there. Like you need to actually change everything that indicates you're going to be living there. For example, you might need to change your driver's license. You need to register your vehicle, like if you are an RV, or even a regular car that you store it. You're going to need to register that in a state where you're choosing to change your domicile to. And this is one way that you can actually reduce your state income taxes, because it's like you are moving, except for you're a traveler, so you're not actually like physically buying a house there, or you're not physically, maybe not even physically renting a house there for X amount of years. But changing your domicile is almost the same thing as moving, except for you're not actually living there full time, because you are a traveler in this circumstance. So that's why it's a little bit more of a niche idea if you are a full-time traveler. And then we have number 3, which is substantially different from the first 2. So number 3, a way that you can reduce your state income taxes is by reducing your actual taxable income within that state. So there are many different rules, because we have 50 different states. We might have 50 different, law books when it comes to taxes. But generally speaking, if you can reduce your taxable income within that state, then you're going to reduce your taxes. How you do that is going to be highly dependent on your state tax laws. But generally speaking, you have different types of income are not going to be subject to income tax. Just like with the federal income tax, some income sources are not going to be taxable there, and it might be like the same, it might hold true within your state income taxes. So let me give you an example here. So not all income is treated the same. Sometimes you can have things like gifts, rebates, credit card rewards, certain benefits from work, maybe scholarships, retirement income. So different kinds of income like that might not even be taxable in the state where you live. So just by changing the way you earn income, or changing the way you gain income, it could possibly lead you to paying less in taxes. So keep that in mind. Look up the state laws where you live and see what kinds of income maybe not taxed. Maybe they might be taxed at a favorable rate. Maybe there's certain kinds of credits that are available for that kind of income, or something like that. So just learn your state tax laws, because you might be able to find a way to make some extra income without having it be extra taxable income. And next, I have a really good one for you. And one of the best ways that I have found to reduce my state income taxes was to like this video. If you like this video, then it will substantially reduce your taxes. Okay, maybe not, but you can still try it, right? So still try and hit that like button if you're enjoying this video so far. It really does help me out, and I really do appreciate it. But for real this time, let's move on to number 4. And number 4 is one that I think that everyone should be involved in, and that is becoming a business owner. Becoming a small business owner, that is something that you can do in order to substantially reduce your income taxes, both state and federal. The reason for this is that business owners have very unique circumstances that allow them to deduct so many other expenses that are within their lives that apply to their business. So if your state follows similar rules to what the federal government does when it comes to taxable income for business owners, then you're only going to be taxed on your profits and not just your income. So whatever your gross income is, that's not what you're going to be taxed on. You're going to be taxed on whatever is left over after you cover your business expenses. And there are many different unique ways that you can, have these business expenses where they actually benefit you more, because those expenses are associated with your business, rather than if you're an employee and you have expenses that are related to your work, those are generally not going to be deductible. But if you are a business owner, any kind of expenses that is related, reasonable within your business are going to be deductible. And so you can actually substantially reduce the amount of taxes you pay on a similar amount of income being a business owner than you would being an employee. And that leads me to number 5. And number 5 has to do with state tax efficient investments. So there are certain kinds of investments that are very tax efficient when it comes to state income tax. Okay, and this is going to be more unique. The more higher of a tax you're paying within your state, the more valuable these might be to you. So for example, one that generally applies to states and the federal government is by utilizing tax advantage accounts. So we all know that things like traditional IRAs, Roth IRAs, your 401k at work, or the Roth 401k at work, and similar other tax advantage accounts. So usually those are going to apply to the state just like they do to the federal government. And similar to that, your state might also tax something like long-term capital gains at a more favorable rate, just like the federal government does, or they might tax dividends at a more favorable rate. It just depends on your state tax laws. But more uniquely, there are going to be certain kinds of bonds that are going to be state tax efficient. So some municipal bonds, they're not going to be taxed the state that you're in, and also treasury bonds. Treasury bonds are going to be exempt from your state income taxes because they are interest paid by the federal government, and vice versa. If you had a municipal bond, they shouldn't be taxed at the federal level. And so looking into state specific like tax advantage investments, it would be valuable to you the more or the higher your tax rate is within the state that you live in. And this whole thing accumulates into number 6, and that is to just learn about your state laws. You know, if you're going to be living in a state and you're going to be living in that state maybe for a good amount of while, and you're going to be earning income in that state, then maybe you should learn the state tax laws, because this is going to help you gain the advantage to reducing your state income taxes more than anyone else that's not doing that. Just like you should be learning about the federal income tax laws, and I like to talk about that all the time, you should be learning your state specific tax laws. Because you can bet one of the first things I did when I moved from California to Tennessee was I learned about Tennessee's income tax laws. Now I first learned that they didn't have any income tax, but they do tax, you know, business income. And so me as a small business owner, I actually do have to pay some kind of income taxes through my business in the state of Tennessee. And it's something that you should know beforehand as well if you're thinking about moving to a new state. Learn their tax laws. Learn the tax laws of the state that you're currently living in right now. Because we have 50 different states and we have 50 different state tax laws. And that leads me to the big question here, and that is, how do you personally reduce your state income taxes within the state that you're living in? If you want to share that in the comments below, I would really appreciate that. Just leave a comment, say what state you're in, and what have you done in order to reduce your state income taxes in that state. And if you live in a tax-free state like me, then good on you, right? You've kind of mastered the game there. And then after you're done leaving that comment, I would really appreciate it if you checked out another video that I made, my full guide to actually minimizing your federal income taxes. Reducing both your federal income taxes and your state income taxes is important. So make sure you check out that video next. It's going to pop up right next to me. Thank you so much for watching this video. I'm Zach from OnCashflow.com, and I hope to see you next time.